But the one thing that I'm going to ram home again and again in the next 5 minutes, and then in all my answers to all the questions, is the need for local and regional finance. And this country just doesn't have enough of it. I mean, I could stop talking now, really, because well, no, I need to tell you what the problems are, but also what the solutions are. So to make this point, Torbay, which is a unitary within my patch of about 150,000 people, it's quite a small unitary authority. They have been working on community wealth building, and what they've really picked up on is the power of procurement. Great, we've seen the evidence in Preston. We've seen the power of procurement to stimulate new enterprise in the economy that's more broadly based. That's fantastic. However, the original Cleveland model on which the Preston model is based, the role of local finance is critical in providing the startup finance and ongoing support to these new enterprises that are going to come forward and take advantage of the new procurement policy. And if you don't have that piece in place, then you will never realize the full potential of community wealth building, which is a point that Preston know very well because they are trying to start up a bank as well, as part of the picture. So Torbay, one of its twin towns is Hamelin in Germany, as of Pied Piper fame. This is an area of the same size population, has many similar characteristics, but one important difference. The Sparkassen, the public savings bank, based in Hamelin, it serves just that region. It champions financial inclusion. It does most of the small business banking. It's there for the long term. It's had sustainability in its thinking in terms of lending policies for a very long time. And it has assets of £2 billion just for Hamelin. Has Torbay got that? No. That is the problem, or the problem I'd like to highlight. It's not the only problem, obviously, in the world, but it's the problem in terms of how the finance will flow for a Green New Deal that I think is one that we urgently need to address. And it's, so my sort of research over 10 years has been to highlight the role of community banks, not just in Germany, but Switzerland, Japan, Canada, America. The list is long that have these institutions. And the role they play in improving the resilience of local economies when things like COVID and the economic fallout happen. And so our regional and local economies are less resilient as a result of lacking these locally embedded financial institutions that really know the economy well and can respond quite quickly and creatively. But also the evidence that these sorts of institutions do support the kind of higher social and environmental outcomes that we need. So how might one introduce them? Well, I think banks are important because banks, with a deposit-taking institution with a banking license, can do things, namely create money, that many other financial institutions can't. But that's not the only institution you need. So we do already have CDFIs, community development finance institutions. The problem here is that they're patchy across the country. But specialist lenders like those can do much more, particularly if they have additional specific funds. They can make interventions to support more BME entrepreneurs, or you can make higher risk interventions for more social objectives and accept a lower return through those vehicles, which you can't with a bank, because a bank is looking after granny's savings at the end of the day, and it has to be quite conservative.
Okay. Yeah, very well, right.
Well, you see, that there are, I'm happy to be critical of large banks, but there is some truth in what they say about the regulatory structure of a bank is quite constraining in providing risky capital to smaller businesses. And that's partly why you need smaller scale banks that are much closer to those smaller scale businesses in communities that can gather the additional information that you need to be able to safely lend into those sorts of smaller businesses and communities that a giant bank can't do. A giant bank can do giant things really well, but it is pretty rubbish at small community stuff. It's just the nature of the scale. So the theme there is, if one of the key themes is about the need for regional and local scale finance, I think another theme is about diversity. So learning from ecology actually and systems thinking, we know that systems, resilient systems have a much more diversity of different sort of organisms within them, or in our case, institutions, economic institutions, that all can fill different niches. And that way, that everybody gets served. Whereas, you know, we have a sort of banking system that's the equivalent of a forest with a few large predators in, and that's it, you know. What we need is a much more diverse ecosystem of financial institutions. We need to find more successful ways of supporting and growing that, I think. I mean, obviously, the mainstream banks can do a lot to finance a Green New Deal, but I know that Nick is the expert in the room on that and can speak to that. So I think and credit unions I haven't mentioned. I mean, credit unions we also have in this country, but a sobering sort of fact is that when you add together credit unions and CDFIs in the UK, compared with similar scale, compared with local sort of mission-driven, social mission-driven banking sectors in other countries, ours is about 1,000th of the total assets. It's tiny. It's tiny. So yeah, you know, people say, well, we've got credit unions, can't we build on those? Well, if you can multiply them by 1,000, then yeah. But you know, how are we going to do that in a hurry? So I think credit unions again can do certain things very well, but we have a huge chunk that's missing, and it's this more city and county level and sort of regional level funds, banks, as well as community investment funds. And the final piece to link I want to mention to link to what Francis said is, I think, a really interesting area to develop is to build on the success of community shares, which is a success story, I think, in terms of a regulatory architecture. And I'm certain that the feedback I see here is so many people who would love to be able to put some of their savings into a fund that could own community assets and get a smaller return, but know that they're investing in the local community. So those structures could be really powerful. So I think we need those that can own the assets. We need community banks that can then look after the enterprises that trade from those assets.